Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix. How's it going?
Marco, how you doing, man? How's everything? Good?
Good. How's your
Get
weekend?
my mic a little bit closer. Very
All
good.
right.
Very good. Got some sleep. What are we
Nice.
seeing today?
That's good.
I wanted to start off always, in the next few weeks, just every day mount on what we're seeing in the macro environment, what we're seeing, as far as the flows and just what good articles to read. But today, I think, Bloomberg was out saying that they were going to raise taxes, and Biden's administration is talking about, or at least having a discussion on how they're going to raise taxes, and raising taxes is usually never good for the market. So, when Trump came into the market in 2016, there was this push to lower taxes, corporate
Right.
taxes, stocks. You know what stocks did from 2016 straight up. So the talk of raising taxes, corporate taxes, to pay for a lot of what he's planning on doing. We'll see how the market handles that, but that's just one more element that is now coming into play. Usually the government tries to put out these feelers, so maybe this is a planted article on Bloomberg just to make sure that everybody understands this is coming. But that's on the way. You see oil down a little bit today, but it's interesting how not everyone, but many people are talking about $80, $100 oil. Oil trades weak today to see what that does, but $80, $100 oil, people forget that that's also a tax, right? $80, $100 oil, you go to the gas tank to fill up your car. EV is not happening for years.
Right.
So you still got to go to the gas station to get gas. And that is a tax. Each month you're getting taxed an extra, depending on how much you drive, could be $100, $200 and depending on what type of car you drive. For me, it's a lot. I drive one of the big SUV trucks.
Nice.
So,
Okay.
it cost me, going to the gas tank, you see it, you feel it. You're like, wow, to fill it up, it's costing $100. So, these are taxes, if you will, to the public. You talked, I was reading an article about Uber. The government was saying that basically they had to claim anything above, Uber would have to claim anything above $600 to gig workers. So that means that all these gig workers, as of this year, it was $20,000. So now anything that they make above $600, they're going to get a 1099 by Uber or, as consultants. So they got to come up with ways to reduce that tax. So there's a lot of tax talk I've seen over the course of the weekend. I thought that was interesting that it's just starting to pop up. And so keep that in the backdrop. I think this week we've talked about how this market is trading today. It's made its way back to positive, but I think that I think it's important not to chase the news. I think it's important. The news has a funny way of creating a story around the movement. So market's down, they create a story for why it's down. Market goes up, they create another story for why it's up, even though it might completely contradict what was said the previous week. So I would simply try to figure out what the market is doing, price action, what it's saying, and let's try to then frame what we're looking at and say it could be this, it could be that. Nobody really knows until it actually happens. But I suspect that at some point the bond market's going to matter. I want to be on record saying I suspect that if the bond market keeps going down, I suspect that something will happen with the equity market in a negative way. I don't know how negative. I don't know what's going to be the exact moment or cause, but at some point it matters, right? The bond market getting crushed, it matters. It's saying something, right? The fact that you're, the rest of the world doesn't want to buy our bonds, it's saying something. You look at Greece. Greece collapsed. Why? Because they couldn't print money. They couldn't sell bonds anymore, right? Because nobody wanted to buy their bonds. And before this podcast, for the last 3 years, I've always been saying, if we get to the point where the U.S. becomes Greece, now that's a far away, but the idea, I was trying to be extreme when I'm saying this, that the idea is when nobody wants our bonds, we're in trouble. The currency is in trouble. And there's this big chess game going on over the last 15, 20 years. China's playing, Russia's kind of in there. It's like a 5D chessboard where people are making their moves. And, I think China's doing a pretty good job right now. They have their own problems. We have our problems. The world has its own problems. But it's sort of this game of who has the least problems and who's going to be pushed off the cliff first, right? So if somebody could push one country could push another country, a powerful country, off the cliff first, then that country can gain its power back. Right. And as we know, as a culture, China plays the long game. And, you have to admire, to some extent, you have to admire the patience and the little by little movements. They're buying everything in sight. There's an article today about how they're buying Norwegian companies, and Norway's kind of saying, what's going on here? We'll slow it down. But why would Russia and China be buying Norwegian companies? Because they know that the next resources area is probably Antarctica, or the fight for Antarctica, or the Arctic Circle, right around there. It's enormous resources, and they're going to attack around the world. Again, moving chess pieces to say, okay, Norway will give you money, or our company would like to buy your company. But in the grand scheme of things, it's another pawn that's moving closer to get your queen across the board. So these are things I look at. I don't know what it means for today, but I do see that there's chess pieces being moved around. And then when I have the macro information come in, we try to make sense of it. But I'm telling you that I think the bond market matters, and we have to keep an eye on that. We also have to look at flows, right? So no matter even if there's really, really bad news this week, even if there's really bad news, the market could still go up just because there's money coming in. So at the end of the day, flows matter. I think some of the best research out coming from Wall Street is to tell you where the flows are coming from. The prime brokerage is saying, well, hedge funds were selling this week, or, the big guys, they were actually selling too. And then it was the retail that was buying. Those flows matter because that's what's pushing the market. So we could be up and trade very well, even with really bad news. By the way, also 24 hours before the Fed is usually positive. And then the week of this expiration is usually a positive week. So you have that working in your favor on a positive note. On the negative note, you have the bonds, and you have this a tsunami maybe of selling that has to happen by the end of the month, or 2 weeks around the end of the month. And you have this, nobody talks about this tax event, April 15th. People have to give their taxes to the government. And I'm of the camp that there's a lot of new investors here that they're still swinging it around. And until they actually have to let go of that money, they're just going to keep swinging it around. And the market has a funny way of really punishing sort of that activity. It just does have a funny way. So we're looking at that. The other thing I want to make sure that we're always focusing on is, which side on these fantasy stocks, which seems to be a lot of momentum names, and where everything is, a lot of the money has been chasing. What side of the mountain are we in? And we're right now, it appears we're on the right side of the mountain. And when we were on the left side, I was warning you about this side. This is a hard side to trade around in. It's a very, very difficult side. So just be careful. If you're going to be trading on any of these names, it is going to be a tough setup. It's a tough trade because most people are not used to shorting or betting on the downside, and you just got to be very careful with your ins, your outs, and chasing these things up and down. You can get really hurt on this side. This is where the market takes its money back. So if you made good money on the left side of the mountain, great. You want to keep it. You want to be very, very careful on this side of the mountain. Last piece of news, two pieces. One is very quick. Las Vegas. When I saw this over the weekend, I saw Las Vegas. The streets are crowded in Las Vegas. They're opening it up, and the conventions are going to start there. Enough's enough. We're going to really come back and try to make it all happen. They have 50% rules going to go up. But, when you see a crowded street in Las Vegas, it's starting to show man, people are going to be flying to Vegas and flying to Miami and flying to wherever, Cancun, wherever they want to go, destinations. And that's good for airlines, for hotels, for just money starting to flow, restaurants. So that's good news for the economy. And then lastly, DraftKings did a $1 billion convertible bond today. So we could talk about that a little bit later. If we'll take a look to see if there's any options in there. But DraftKings $1 billion convert, 150 shoe. So they, if the demand is there, they'll give another 150 million. I think it's a great deal for them, right at the highs. It's at your stock high, and you're saying, okay, fine, here you go. They're doing bonds, and then they're giving. I don't have the details. I don't even think they're out the details, so I'm not too sure exactly what's happened. But they're it looks like they're actually. The convertible bond, which incorporates a option in it, a call option, and it's really a bond and plus an option, almost. And they're actually going to buy from the dealers. They're going to buy the upside call. So what they're doing is really selling a call spread, a very large call spread in DraftKings. Okay, but we'll talk about that if we see any your way. Cool. Where do you want to start? What are you thinking?
Cool. I want to start with Macy's. No, actually, airlines. Sorry, when you're
Macy's
opening
airlines.
Okay,
airlines
first. Yeah,
okay.
It goes hand in hand with Vegas opening this and that. I mean, it just
has to be. I saw today they were all up, and it is what it is. But these American Airlines here, is that what you're looking at? American Airlines,
American, Delta, United, all that.
Yep. Okay, yep. I did see a little of these before. It looks like they're getting bigger here. So this is March. Let's go a little bit out. This week. That would just look for people messing around here, but it looks like a lot of shuffling around. The 26s, this looks interesting here. 52,000 nice. of so what do they do here? It looks like they were buying, looks like they bought some right out of the get-go. 47 cents. Okay. So let's look at that. Let's look at so it looked like that just looked like good news. We're gonna jump on it the minute it opens up. But here, April looks like 67,000. Now we were on this we've been seeing a lot of call buying all the way up, all over here, right? In February, all through February in AL, when it got to 20, 21, even continued, and now it broke up upside here. So we're gonna look at the chart in a second, but this to me looks like a lot of shuffling. So it looks like the 25 calls, I see 16 open interest, 16,000 open interest here in the 25 calls, and then I see 20,000 volume. So that's big volume, but it looks like they're getting out of the 25 calls, and I would suspect that because they were long, I believe they were long these. They're getting out of these, selling the 25 calls, and then they are buying back some 29s and 30s here. So let's take a look at the 25 calls. 25 calls, 70. Look closer. Looking at the vol, looks closer to. Wasn't like a big push up, but then let's look at the 30s, the 29s, right around the same time. Spreads looks more. These look a little bit more popping up on the offer, and the vol is a little bit higher. So I would say that they sold. Yes, they sold these calls. I would say they sold the 25 calls, bought the 29s, and probably bought the 30s. So a lot of just shuffling here. Let's take a look at the Mays. Earnings come in April. So in the Mays, we got the 25s. Again, a lot of open interest. So let's go to the chart here. So the chart, let's bring the chart over here. Chart to AAL here. So we had looked at the chart. Let's go back 2 years. Let's just try to frame again what we saw. We were looking at, when it got to 22, we were looking sort of at this 22 level, which was interesting because it had gotten here to 22 the first time, right? You see that?
Yep.
So we just sort of say, for whatever reason, it stopped there that first time it went up. We talked about the move here, and then the move straight down here, right? We talked about that, and how when we saw this move, remember we saw this move, and what do we say when we went down here? It says it's not the same type of move, right? This is a very sharp rejection. So this was maybe the market saying not too fast. This is going to be a little bit longer, this coronavirus. And then when it made its move again in November, December, it didn't come straight back down. It wasn't rejected so hard. It started like fanning off this way, had this move up over here in February. Okay, had a
Right.
move up February. Again, rejected very quickly. You can see the rejection very quickly. So the rejection very quickly is never, it's basically saying that that's a level where they are big sellers. But then how it just climbed right back up within 2-3 weeks was we were starting to say over here just last week, a week and a half ago, we were saying this is bullish. This is sort of a bullish move here because, it was rejected hard, and 2-3 weeks later, the market's taking it right back. Okay. So
Right.
this is the breakout here to 24. We were saying that, what did we say? We said that normal, in a very normal environment versus before coronavirus, you could say we were back around the 31 to, let's just call it 26, that 5-point range. So 25 to 26, this is normal, right? We're looking at normal here, right? That was before coronavirus, before things shut down, and then this happened, and we were looking at this lockstep move that this market was doing, and it was just trying to move up and down, and with probabilities, if you will. So if this is getting back to flat or getting back to normal, you would say, okay, down here, it looks like these things are going bankrupt. We're never getting back to normal. This is game over. Has this move, but then comes down and does this for 5 months, okay, 6 months, from 11 to 15. And when it breaks out, it basically is trying to say to you, we're getting a little bit closer to normal. Normal's 26 to 31. We just got from 15 to 18. And this is going to be a little bit longer ride, so we're here for another 2 months, and then we pop out of there, come back down. So it's trying to indicate that we're staying here, but then pops back up. And when it gets here to the top, it just keeps climbing these, if you will, 11 to 15, 15 to 18, 19, 18, 19 to 22. And now it's gone from 22 to 24. So these almost $4 type of increments all the way up, sort of saying the percentage probability of us getting to normal is increasing with each, first it was 6 months, then it was 4 months to the next move higher up than it was, and now it looks like it's only a month and a half. So we're getting close to, so we're getting close to normal, which is 26 to 30. So when I see, when I'm looking at, we were looking at 20 calls back in the day, 25. Now I'm looking at this and saying, okay, can the market go to 35? I mean, if I'm looking at these options here and someone's saying, okay, the 25 calls in, we were looking at April, the April 25 calls, trading around $2. You see the risk reward break even price here?
Right.
That's $30, $29.57. So if I had to buy these right now, the 25 calls right now, we'd be looking towards $30, $31. And $30, $31 is actually above sort of our range of what normal should be, and that's a lot. That's basically saying we're not just even going to get back to normal. Actually, American Airlines is going to do better. And I'm not sure that's the case. I can see demand increasing, and I could see maybe they've cut costs, but the price of getting an airplane from here to there, it's probably cost more today than it did 8, 9, 10 months ago, even a year ago. So I would look at that cost. I don't think the cost has really gone down that much of running an airline, except maybe that they're doing less flights. I'm not sure. To me, it doesn't seem like that's the case. And I think that you have a whole business. I don't know the exact revenues of each company, but I believe the high percentage of where they make their money is on business class, first class tickets. And that whole business traveler may not be coming back the way it was. And so you got this problem with the airlines and even hotels where the business traveler is not going to be the same as the business traveler a year and a half ago.
Right.
I don't think that. I think that has changed maybe forever with Zoom and the ability to, sure, you'll still go out there and meet people, but not the way it was.
I've seen some predictions. They're saying 10 to 20% drop in business travel, like for good.
In business travel?
Right.
It might be more. Frankly, it might be more than that. Right. It really, I used to, when I was on Wall Street, I used to travel 5-6 times a month. Wow. Literally take a plane, go wake up, run to JFK to Boston, JFK to Chicago, JFK to Houston. Nice. And then the next morning or that night I was on a flight back from JFK, back from wherever I was. Especially if it was on the West Coast, I would go to San Francisco, okay, get there for a meeting, and get on the same day plane from San Francisco at night back to New York.
Wow.
To be at work at 8 o'clock for the bell and doing it all over again. Pretty nuts. Like it was pretty nuts. So, but I don't think people need to do that anymore. These days it's very much. Then on top of that, you got restaurants all closed, and the experience is not the same, and it's just not the same experience as it was. So, I would say that's my only concern with the airlines. And if we're back to normal, we're already back to normal, I could see why we're not seeing a lot of reaching, but in fact, we're seeing what I would call shifting the risk reward around, taking off positions probably to some extent. I mean, how much can it double from here? Look, I'm not saying it can't. You've seen things go crazy. So what I am saying is that if you're looking at what I'm looking at and we're back to normal according to the price, then the market's going to want to see normal, right? At some point, the market's going to say, are we back to normal, or is normal fine? We'll take it to 30 first before we really get out. But what's going to happen here when the next earnings comes out and it's not as bullish as, we're seeing demand, but we're not seeing the business customer back. We're not, the planes aren't filled because we had to separate a little bit. There's more protocol. There's more learning, which means classes, hiring, expenses, everything that goes into this new world of flying. So I suspect that we'll see the same thing. You want to look at UAL? I'm sure it's the same thing. Volatility is not up dramatically, which is telling you something right there, even though stock's up dramatically. The open interest, everybody was set up. People were set up here. Go ahead.
April 1st, I would take a look at in UAL.
April 1st?
Yeah. I
see here it's all under. Okay, 70 calls. Let's see what we got. 70 calls. This is interesting. So 70 calls, I see spot. There's nothing here, but let's see if there was. Okay, so these are spreads. So there's spreads going on here. It looks like someone is selling calls. They did the first tranche at 78 cents at a 72 vol. They did the second tranche at 79 cents at a 69 vol, which means the stock went up and they still sold. The stock went up and they sold these a little. The stock went up. I don't know how much, but then they sold these only a penny higher. So the volatility came down. So somebody is selling the 70 calls in UAL. And let's just look at where UAL. Let's look at where UAL sits as far as being normal or not normal. But I think that if you frame things, you can see a clear picture of what you're looking at. And whether or not, AOL looks like it's a little bit closer to normal, right? Right off the bat, you see that this has a little bit more room to reach 77.5. We had this level over here, 30, and we had this level, 39.5, 52. Okay, so we had this jump, very similar. Okay, now we've broken out here, and we really don't have anything till 75, 77 range. Right, so somewhere around here, and the stock's only 61. So maybe this is a little bit more interesting. But they're selling. Somebody is actually selling the 70 calls. So, and that's after this is in April. So selling the 70 calls. Selling these calls right here at $1. In order to buy them, you would have to think a lot higher. So in order to buy these, the risk reward on these things would be 76, which is which $80, which is not what they're looking at. So they're selling these, and they are. Let's see what they're doing over here. Which ones? Those are what time did they trade? So 2 lots traded around 10 o'clock and 12:20. So it looks like they're spread. So they're spreading it out with something. Let's just take a look if we can find it. Let's see. 20, 75, 65. How about closer up? Because maybe they got caught. Maybe the 60s. There we go. Is that right? Maybe not. Let's see here.
I'm trying to see.
I'm thinking that they've bought something somewhere because they bought something somewhere because they are. We can look all day for this stuff, but my suspicion is that they're buying some calls back and then selling these calls, or they're getting out of something, they're selling something that they've made money on,
Mhm.
and then sell, like this one here. Maybe they've been selling calls in the morning because it looks like this is the volatility is coming down as the volume's coming in. So maybe they've sold something here, and then maybe they just want to overwrite the position as well. They still like the stock. You know, this is a decision to make between owning stock and owning call options. So they might have bought calls around here. We started seeing, remember in February, we were seeing call buying right here. Okay. And maybe they're buying calls here, and now they're willing to like get out of calls and, you know, either buy, maybe this was calls and stock. They just get out of calls and then they can sell these calls against it. Again, it's shifting where the leverage is. In this case, they're basically saying, we'll take the dividend. We like UAL here, and we'll take the dividend of $1 with this premium out to 4 weeks, April 1st. Is that where we were?
Yep.
Yeah. That's 2.5 weeks. You know, they'll be happy to take in $1. If you, let's see this, April 1st, 70. So selling these at 78 cents, you're talking about
Right.
1.3%. So they take a 1.3%, almost a dividend, you know, on 2 million shares. That's pretty good, right? That sounds pretty good. If you're holding 2 million shares, your stock's up 5, and now you can take $1.20 off the table.
Nice.
Okay.
Good.
All right,
great.
good. So those are the airlines. Delta Airlines, I'm sure, is the same. We won't go through the whole thing.
Pretty
Just
much,
look at
yeah.
the board. It's going to be the same thing. I'm sure. People remove his 15,000 on the 50s. You got a lot of open interest already there, so I think people will be taking off their trades here.
Yep.
Made some money, take it off. Okay. What else we got?
Now talking about this, recovery. Sorry, there's Macy's as well. We talked about it way back during the holidays when we just started. It was at $10.
Macy's, yeah.
It hit $20 today. Yeah.
Wow. I think you got long these for like a hot minute, and then if I remember
I did.
correctly,
I got
you
stopped
bought
out.
some calls. I remember you waiting for like a day. You're like, okay, I don't want to do this one.
Right.
I just remember that. Okay, so the April 16 23s looks interesting. It's interesting. They came in to buy them here. I could just see quickly the volatility's gone up, stock's gone up. They've been buying them. Looks like they come in right over here. So 58.67. Okay. So they're buying Macy's here. You know, I think, again, I'd like to point out something to you when you're looking at charts. Let's just frame it the way we frame it, and let's see what we got here. Let's go. Yeah, this is good enough. Let's see something, because they're going for a big number up there, it looks like. So I want to go back. I just want to give some context here. Always good to see context with somebody saying what could happen. Okay, so we have it here. Okay, so it's called 36. This 36 is something. 36 normal, right? Normal here, though, was we had here, normal was somewhere around here. So we've kind of surpassed this, what looked like normal. Here we had this, and then we had this. So we're up to this. I'm looking at this 24, and then we have this right here, and then it's going to trade all the way up. But we have this here. Where does this lead us? Somewhere around here. Was there? Okay, that's fine. I'll leave that there like this. And we had this one somewhere around here. Okay. So doing its dance here, basically Macy's is going out of business. There's never going to be a shopper again. And it starts making its climb. It jumps to 22. This name was, you know, a lot of retails had been short. So, you know, during this time, this is when GME was really rock and rolling. So stock jumped. But I guess, you know, what I want you to see is, let me make it narrow now. So we framed it 36, 24 to 36. Let's look at, I want to do just, where do I want to go? Just 1 year. Because it's important to see, when you're looking at something, to see how the rejection here and then the rally back up. See this rejection, rejection, and then the rally back up sort of with decent volume. It's really strong. I mean, that says, see how nothing really traded. This traded within 24 hours, up, down. This was something where someone got caught in a bad situation. 12, 14, 17, 22 trades up, trades back down, trades all the way back to 13. This killed somebody. This took out some shorts here. Okay. But if you just take out that one big trade, or maybe it was one person or one machine, you have this sort of straight line kind of going up here, right? And it goes sideways here after this. It's found its level, and then it starts breaking out here. 16. Especially if it ends up here, looks much stronger than this, right? The way it's going up. You see how this is going up and holding the highs. It looks much stronger than this. So we'll see. Well, if it returns back down to 19, then again, it's another rejection around here. But, I'm looking at this going, it's a strong stock here. It's trading really well. It's closing near the highs on not as this is just a disaster. This is a short, probably someone's short getting killed here. Could have been Melvin. It was right around that time. But this is starting to move up in a way that's giving it, there's a lot of power, there's a lot of force here. This is just clean up. This is different. So I want you to recognize the difference between 1 and 2. It's important to see if this finishes today here. If this goes back down and finishes today at $19, and you're going to have something that looks like this high wick all the way down, this candlestick is going to look like a wick, that's not going to be good. But I suspect that it'll hold, and it's going to hold 20 and a half, and this, could keep moving. So what are they buying here in Macy's calls? I suspect
they're buying
23 calls for $1.10, right? And they're looking for somewhere around 28, 29. Let's call it 28, 29. Okay, so 28, 29, and we said what? We said 36, 24 to 36. So this is starting to trade like it's explosive. And I don't know exactly what's happening and why April 16th. I don't have a clue, but it is trading well. Do I want to chase it? Not so much. Right. I'd love to see it come back to I would love to see it. See, right now it's done this. Let's go back. I'm not going to be able to go on the outside, but right now it's done this, and then it's done this, right? It's literally done that. I would like to see it come down like this, right? For whatever reason, maybe the market next couple of weeks has a tough time, kind of do this for a little bit, right? So it's establishing a higher high here, a higher level, if you will, base, create a little bit of space here, and then start making its move up, and then you can see another big move like that. I'd like to see it do this, hang out here for a little bit, and then, the call buyers probably come back in here and do that second dance. You see what I'm saying there?
Nice. Yeah.
Okay. Because it hasn't really broken anything. You see the MACD, I'm getting clues from the MACD where the MACD is trying to make its high. It's not like there's a diversion. This is doing what it's supposed to do, and this is just trading straight up. So this is a strong stock. I don't know if I necessarily want to chase it, but someone is saying, give me a placeholder here for $1 for the next month. If I don't want to miss it, if it does trade $30, but I'm sure they'll get longer. Those guys buying those calls, I'm sure they'll get longer. 18, $19, 17 to $19 call it. They will be buying stock. That's how it looks to me. That's the way that chart's reading to me. Is that fair?
Yeah, nice.
Okay.
I might get back in, just second look with Macy.
Yeah. You sold it at 11 and 22. You can't get enough. Okay.
Right. Yeah.
All right. So patience. What else we got here? Let's see.
Let's look at some media stuff here, like Viacom, Discovery, I think it was.
Viacom's been off to the races, right?
Yeah, I don't know why else.
So Viacom seems to be going through a change in identity, if you will. They're starting to value the stock a little bit differently. Wall Street does this in certain instances. It does it a lot in something where management goes from looking at revenues, looking at total revenues, and then all of a sudden Microsoft turns into a subscription. So when Microsoft was just this big company And then all of a sudden they started doing subscription. The subscription stops. It changes the way the revenues come. So it messes up the models. But over time, Wall Street learns to love the subscription model because it's stable. You can model it. You can understand it. Same thing with Adobe. Adobe goes from just paying as you go type of thing to then subscription model. To paying as like one-time payments to a subscription model. Every month they're going to get a stable. For a year, the revenues look like they drop substantially, but then over time, Adobe does. You can look at the chart of Adobe, and it flies. So that's just one example of how Wall Street can change how they are their perspective of a company just by changing how they view it. And Viacom, they're looking at it, Paramount Plus, which is their version of streaming, and what they're how they're going to release their content, which is a lot of content, by the way. And they are that content has been a loss leader. So if you have a company, imagine you have a company that imagine you have a company where there's one part of the company that is losing most of the money, right? And you're that company, and all the losses that come with that company, you believe it's going to be very valuable, but all the losses that come with that company get put together with everything else that you're doing. And it makes your company not look as valuable, right? But if you tell people we're building something over here that's going to be super valuable, nobody really believes you until they start seeing really what it is. So when they branch out Paramount Plus, and with Paramount Plus, they take all of these losses and they put it with Paramount Plus, then people say, okay, we can understand Paramount Plus, and we're going to forgive you for those losses. Why? Because they see Netflix grow from a streaming service with massive losses to what it is today. So they can understand it takes some losses to build that. So we can go with that. Same thing with Disney, right? Massive losses in the building, but once they get to 100+ million subscribers, they understand and they go, gotcha, no problem. We love that business now. We love it, and we're going to take this. So Paramount Plus, they've taken this, they've showed analysts that if we just took this out, our business here is very strong. It's a good business. This is where all the losses are, but we're building something that's going to be great. Well, look what happens to the stock, right? I mean, it's been doing this, this whole Paramount Plus has been from the beginning of the year. On top of that, unfortunately, you got a lot of shorts. You had a lot of shorts in the name, and that's never, that's probably ripe for a Wall Street bets and people jumping on that type of trade. So that's something that's interesting. What are they doing in the options? I would suspect I'd be hard pressed to see if I'd be shocked to see if they're buying calls. Are they?
It's puts actually.
Buying puts. Okay, that would make sense.
September, April looks like buying.
Okay, I don't think Look, I'm not going to say I don't believe that. Viacom is a name that's held by very, very long-term, very, very big companies. And I don't believe that they just think that this is going down. I think they want to hold it, but they probably want to protect their losses. I can't imagine. We could just see who owns. VIAC. Vanguard, BlackRock, Morgan. I mean, you're going to see all Price T. Rowe. This is all big companies. This is not usually your big hedge fund guys. In fact, the hedge fund guys are probably the ones that are short the names, or short the names. So you're going to see Viacom B is a very old school name, and there's going to be this money that stays around for a very, very long time. This is interesting. Nomura holds this much. Nomura is oftentimes associated with a activist, so someone who wants to take a very large position. This is just a side note. Okay, when you see something like Nomura, this is potentially. I could tell you who usually does this. Like Bill Ackman usually comes into something like a Nomura, and instead of buying it publicly and telling people that they're buying it publicly and everybody sees it before he gets his position to be what he wants, they hold it for him in a swap, and then maybe it comes out that he's long in. I'm not saying that's what's happening here, but seeing Nomura at the top here, in a big name like this, in a big size like this, being a top 6 holder, it could be like a Carl Icahn or Bill Ackman, who is using Nomura's balance sheet to hold the stock for right now, so that they could disguise their holdings. It's a private contract, it's a swap, and so nobody can see. They don't have to declare that they own 5 million shares, 10 million. They've been building it for the last 5 months. They don't have to declare it. Nomura declares it, and everybody doesn't see Nomura. But it's something to look at when you see. It'll be interesting to see if somebody pops up as an activist, even though they bought the stock. This is December 31st, so they're already long the stock since here. So the thing's exploded. Maybe Ackman comes in and says, "Yeah, we think that splitting the company up and making Paramount its own stock, or whatever it might be." But something to watch. So I would say if you're seeing put buying is in this, it's simply because it's some of these guys that have made a lot of money and they are trying to hedge their position here.
Nice.
That's harder. That doesn't make me think, oh, this is definitely going down. It just means that someone's being smart about owning the stock and they're loading up on some puts here just to protect their gains. I think you can see it in all this. Okay, this one here is a put spread. Let's see for earnings in May. 100 puts. This actually looks like it's a real trade to hedge it right here at 85. So yeah, I mean, look, I don't know if they're getting out, but these are big holds. These are big trades. So I would say it's probably they think it takes a pause. How about that?
Right.
I don't want to say I think these guys think it's going. I think it takes a pause. Maybe they will release some of their position. You have BlackRock here who does this type of trading. Maybe it's BlackRock. They have 46 million shares. Maybe the next, in May when it comes out, we might see BlackRock reduced by 12 million shares, 30, 11 million shares, or 25%, which is 12 million shares. Maybe we see something like that in BlackRock. So something to watch. I think they're probably one of the people that are doing something like this, or could do something like that in that size. But it doesn't mean they're getting out. It just doesn't mean that they hate the stock. It just means that they're reducing 12 million shares. And when you reduce 12 million shares in this, maybe average volume is 15 to 20. They might take it down to 85, 80. So takes it down to 85, 80, they start buying the stock back here again, or maybe towards down here, 70, 80. But something to think about. So I would say in that median name, it's big short interest took the stock up for that last leg. They're buying puts. I don't like stocks going like that with a story, with something that everybody, there's big names involved, and then they're buying puts and put spreads. To me, that's I like to see to buy puts. I like to see stocks that are already starting to turn. They're starting to turn a little bit, and this is not turning at all. This is just somebody saying, I'll take my gains right here.
Right.
Okay?
Same thing in DISCA. I'm seeing also Nomura holdings and same kind of setup.
DISCA. Oh, it's interesting. Okay, yeah, this is interesting. So maybe someone got in these names and they saw value. They you watch Disney do it, and then all of a sudden you're like, well, look, they have Paramount Plus. Right. You got Discovery Channel. These are all names that once you pull that apart, it's worth a heck of a lot of money. Okay, cool. So right. All right, so we got the media names out of there. How about one that I think is interesting? Actually, before what do we got? Any questions?
One quick question regarding the tool, so everybody can understand it better.
Sure.
Let me just pull it up here. Okay, here it is.
The bull and bear sentiment is based on skew and call puts. Yes. So the bull bear sentiment, this 3-month sentiment, that is based on 3-month skew. 3-month skew. So when it's the blue line is closer to the bull, that means that skew is low. Okay, skew is low. That means that the calls are better bid relatively to the puts. Okay, when skew is high, that means it would be bearish, that the puts are better bid to the calls than they usually are. It's like a seesaw. It's are people are willing to pay more for the puts? If so, then skew is high, and we have it'll be a little bit more bearish. The way to calculate skew and think about skew, it's right here in 3 steps. You know, you gotta right here, the best options indicator. I think it's one of the better ones that people enjoy here. The best options indicator. You know, you have it's a good explanation on how you calculate it, how to think about it. There's a study there that was done that I talk about and what they found. It gives you the logic behind why it's a good indicator. I think overall it's a very, very good, informative video and well worth the listen if you have 3 steps. But I tried to make it easy for people to look at it just at a glance. And in Viacom B, you know, it's going to be moving throughout the day as the board can shift, right? The board, these things, you know, the board's going to shift from the morning to the afternoon, and so this will shift. But this is when you see it like this, that means, for example, in this case, right, this means that 3-month sentiment is very bullish, which means that the calls are better bid, and than the puts. High implied volatility in the 1 month at the money. That means that if you can find, what they might do is find a strategy where they might be able to sell the wings. So it's almost a strategy that we talked about, right? You buy a put spread, and you can sell an upper call, right? The market is better bid for the calls than the put. So you would sell the upper calls, or you could sell the upper calls, or you can buy sell the upper calls to then buy a put spread, because you could sell the downside wings. So that's sort of how you start using these things, where this would mean here you're looking for strategies, and this is shifting the risk reward when you're selling options, buying options. This would be, okay, let's try to find something where we can sell options, but we can also find opportunity where we can we're going to sell calls, and we can maybe buy some puts, because this is bullish here. That means the market is leaning towards calls, so we want to sell them the calls and we want to buy the puts. That's how they would look at it.
Cool. Thank you, Felix. And everybody who's interested in 3 steps of profit, best options education, the link is in the description. Don't forget to like the video, share, and subscribe if you haven't. And now, Felix, what was the one you wanted to talk about?
Sure. So one name that I saw over the last week, I've been just keeping tabs here on this, is SKLZ. Stock's trading very well today. This is a name. Kathy Woods is long. You know, there's something about this one. You know, if we look at the chart, it almost looks like, you know, we're on the opposite side of the mountain here, so you want to be careful. But someone is buying the what's interesting, someone is buying the 25 puts in April. And they came in over the last 2 weeks. They came in on Friday again, and they bought these April. Let's see, the April 25s. See the 12,000 here?
Yep.
Stock's doing well, but this is a name that trades 30, 35 times sales. There's a decent amount of competition in the space. SKLZ. What I find interesting is that SKLZ has no original games. They are a platform that brings in productions that have their games, and they take a VIG off of, they take a commission off of the games. And so you have this platform, you know, I don't think it's unlike Netflix. So Netflix, when it first started, just had a platform, and it was getting into deals with Viacom and Disney, saying, hey, put your videos here and we'll pay you. And that worked until they said, we don't need you anymore, and they started taking things away. In the meantime, Netflix started pouring in $5, $6, $7 billion a year trying to build original content. And it was this, again, seesaw match between, are they going to make it, or is everybody going to pull the content before Netflix could actually get some original programming? Here, it seems like the same story. They don't really have original games, or games that are in the top 10 positions in gaming. And the production companies that are producing that game, they can leave whenever they want. I mean, they have, I guess, an agreement, but at some point they might say, there might be another platform that pops up, and they say, well, you know, we're going to take X% as opposed to you. So SKLZ is valued at $10 billion, 35 times sales. Kathy Woods in the name. Again, over the next couple of weeks, I just thought it was interesting because it fit it fit what we were seeing. It fit the background of what we were seeing, where if interest rates, if the market eventually says, you know what, interest rates are going up, and the bonds don't recover here, then Skills is a prime name that would come under pressure. Someone is putting up a significant amount of money on April 25 puts. I don't think this one seems more like they think it's going down. It came through the SPAC in the teens, in the low teens, 14, 15 bucks. So you're talking about a stock that it wasn't only 3 months ago that it was $14, $15 stock. The guy was all over CNBC, and it was like talking up this platform. I listened to it. I thought that one of the best response from the CNBC guy, he said, so why are you worth, so much money, and why is it? And he gave the answer to CNBC guy. It's up there. There's several, but the CNBC Scott Wapner said, what does that mean? Like, he gave the answer. I didn't understand it, and I was thinking it myself. I was glad Scott Wapner said, what does that mean? He says, oh, and then his second answer was even better. He was like, oh, well, we think about 100 years ahead, like in the next 100 years. And I'm thinking immediately when I heard the next 100 years, I thought, okay, like I got to start figuring out what these people do, because anybody who's selling a story about the next 100 years is, you got to take a step back. So Skills, keep an eye on it. April 25 puts, buyer came in twice now, 4,000 a week and a half ago, and then another 8,000 on Friday. So something to watch, something to keep in mind. $10 billion company, 35 times sales, tough environment. Okay. And the positive spin on it is that they're going to get into India, and you hear the story. There's 1.3 billion people in India. That's 3-4 times the amount of people in the US. And in my head, I'm thinking probably 10 times the amount of income to spend on online gaming. So, I'm not sure the story. It's one of these momentum names. If it goes, it's going to go. And I don't want to poo-poo on anybody's parade here, but it's still a $10 billion company without really original games, and it has a betting system that allows people to do this online type of esports type of play. So anyway, that's one thing I'm seeing there. It ties into, as you're looking at that, it ties into Unity and Roblox. Now, Unity is a little bit different. Unity, man, that looks pretty interesting because they are developing the software and making it easy for you and me to actually build our own, whether it's game or whether it's 3D visualization board. That's different. That's, engineering, build. It's the engine, right? It's the engine of what it's the engine of what you're doing. That's much different. That to me is really interesting. Roblox is doing the same. I tell you, now that I see them, the actual dollars that they make and how it's broken down, it's interesting. They're geared toward the developer who can build their own game. It's do it yourself. Build your own game. You don't need to know how to code. And now they're giving 70%, I think, or 75% of the dollars that come in during the game that kids are playing and paying for. They're giving that back to the developers. So that to me is something also very, very interesting, because it's like websites. Well, 20 years ago, you needed 30 people to build your one website. Today, you have, a software that does it in a second. They just take all the elements, and you got to come up with the game with Roblox that people are going to follow. But again, it's a little bit more. I think it's a little bit more of an engine. So Skills to me doesn't seem like that engine, whereas Roblox and Unity seem a little bit geared, especially Unity. So these are two that have interest me, and I'll be watching for unusual option activity.
Nice. Great. Okay. That's a good idea.
Awesome.
Yep. Awesome. I love it.
One more question. What do you think?
What's the news?
Or do we have anything else?
Yeah, we have a bunch of stuff left. But real quick question, just so you can address. What would be an exit plan for managing a spread is a question.
For managing a spread?
Yeah, so exiting out of a spread. Like an exit strategy.
So, yeah. Okay. So spread, first of all, you won't see me getting into many spreads. We did do a spread into put spread. On SPY put spread. And that was mainly because I don't think there's a crash just yet. I think we go down. I just don't think there's a crash. So I'm taking out the bottom 80% of where I think this can go. So I don't think there's a crash just yet. So I did a put spread to sort of say, okay, we can be within this range. But getting out of a spread, I don't like spreads, first of all, because the way I think about it is you can get if you do a spread with a single stock, it can handcuff you. Many people have probably experienced this. You get long a call spread, and if you would have just bought the calls, they'd be up like 150%. You could sort of get out of them. If you bought the call spread, you're hanging around 70, up 80%. And then after a large move, you've only made 70, 80%. After a large move, it goes against you. So if someone started with a call spread in Oracle, for example, you have this tremendous move, and then the call spread is only up 70, 80%, and then it drops down $7, $8, and you're handcuffed. You were handcuffed to do anything because you're waiting for this 100% move. That's why I don't like call spreads. I think the lesson probably there is that's why the top guys in the world don't like call spreads or put spreads. It's because you get handcuffed when the stock. So say you have call spreads, when the stock zooms to where your call spread is, the one that you're short takes on all the value of the trade, and you're short that one. If you have a put spread and it crashes and it goes from 395 to 370, the 370 takes on massive amounts of value for that spread, and you're short that one. So you're always going to be, when you do a call spread or a put spread and you get the move that you want, you're always going to be short the wrong option. You're going to be short an option that you're not going to want to buy, that short option. You're not going to want to buy it, and you're going to be stuck. And I call it handcuffed. You're not giving yourself a lot time to breathe. And it's you won on the trade, but you won too quickly. So you did a call spread, especially 4 or 5 month call spreads, $5, $10 wide. You can't win because that call spread. You tell me any name out there, and you say Viacom, the April 90, 85 put spread. How much is it worth? Probably $1.80. If it's down $10, $2.20. It can only be worth $5, but that $5 is in weeks from now, 5 weeks from now. So you gotta understand that call spreads, they really handcuff you if you get a quick move, and it becomes very, very frustrating. When we do our call spreads, the reason why our put spreads in the SPYs, we have one on. I have a shorter time period, okay, a much shorter time period, because if we're right, that shorter time period, and I'm right over the next 2, 3, 4 weeks. I usually do 3 weeks, 2, 3 weeks. In that shorter time premium, the bottom strike in our puts, they're not going to go up that much. They will go up, but they're not going to go up that much. If we're even close to our bottom strike, that put spread will be a 2 to 300% winner. Okay, so if we're even close, and if that happens, then the more time that goes by, I'm okay with it, because I know that spread will, if what I think could happen does happen, then that spread is going to save us on the longs. So there's a lot that's going on into that put spread. One, it's the time frame. I'm trying to match up durations with what we have. Two, the ones that I chose, I'm very aware that if the market crashes to 360, okay, then sure, that 370, we're gonna have taken most of it out. So the more days that go by, the closer I am to the expiration date, as it goes down, the less my short put is gonna explode higher. It will go higher, but the less it will. Now, if I did the same put spread out to July and we went down to 370, I'm gonna be pissed, because first of all, it's gonna cost me $7 to get into that put spread, and then it's only gonna be worth 12. And literally, I caught the move from 393 to 370. That's not what we want to do, right? We want to match sort of, if we go from 392, 393, where we are, down to 370, I want to make enough money to protect me against 5, 6 longs that we're pushing long. That's the trick, and that's how. That's why I don't like put spreads. I don't like call spreads just in general. I will do it in certain scenarios where I'm not sure about timing, and especially in this market, I'm not sure, but I do know that there's this element of it could happen at any moment in time. And when it does happen, it could be fairly violent, like we saw. So, I'm frankly, with the put spread that we have on, I'm hoping that the market SPY goes to 405, 408, and then that put spread I could just roll up to the 400s, and maybe at the 400s, 402, if however high it goes, at that level, I might just want to be long puts, because then it could come back sharply down to say 375, 380, and that's when you hit the home run. So it's put spreads, call spreads. If you're using them or you have used them, you're going to learn your lesson that you get handcuffed. and you still want to get out at 100%, but the possibility of buying $1 to make $3-4, yeah, it's there, but that doesn't happen until the end. So the longer the duration of the put spread or call spread, the harder it is to start reaching your marks. It just becomes very difficult. You really need to get that timing. You put more pressure on yourself to get the timing right, that it's going to be a little bit further out. Make sense?
Yes, nice. That was
where I like the call spread put spread is what we showed you in the Oracle trade, where you have your calls on or your puts on, and it goes down. And when things explode, okay, now I can sell you a little bit. Now I get on my now I'll leg into a call spread or leg into a put spread. And the idea is that I'm probably going to get out of that higher leg if I'm wrong. And if I'm right, then my call spread will still make money, but not as much. Okay.
Right.
That's how I would think about it. I don't like put spreads. I don't like call spreads. And that's the reason why.
Okay, great.
All right.
I love that.
Awesome.
What do you say we rifle through some of these we have also, and then we can call
Go ahead.
Yeah.
Go ahead. So why don't you tell me what
we got? VFF, we got Boeing, we got Lee puts, FTCH.
Okay, so let's just go VFF. VFF is what do we got? April. So like got earnings here. April 18th.
April 19th, yeah, and March 18th. Looks like some reshuffling.
So spread. So this is on the bid. So let's see if these look like they were sold, and marijuana name. So March. Oops, sorry. 18. Okay, bought, sold. So it looks to me like someone had been short VFF calls here. See, the open interest is 8,000. They bought these and then they sold the April. So it looks like someone is simply just rolling up. Again, shuffling, moving around risk. What's the next one?
Okay, next one, VFF, and then Boeing.
Boeing? Boeing. Which ones? April's? Wow, a lot going on, Boeing. Boeing's been trading well. We're looking at Boeing over here during the crash, whatnot. Not the crash, the engine trouble. Shut up. So which one we're looking at here?
Boeing April 270s and then May 295s. But it's a different April 1st, I think.
Yeah. April 1st? April 270s. Again, open interest 7,000. You see how the open interest is matching up with exactly with this. It just looks like someone is shuffling around risk here and either getting out of their positions. 940 came in, spread. This is also a spread, 53. Okay. With the 290s. Spread.
Today's the day of the spreads.
Yeah. So a lot of shuffling around. So I would just say it'll be too difficult to kind of go through. There's a lot of options that traded, but again, shuffling around. The stock has made a move from 200 to 270. You have to expect people had bought calls in the 200. We were looking at the call buying in the 200 range, 220. They bought calls here. They're just shuffling around and saying, all right, get me out of these calls. Maybe even sell calls here or get out of that. And maybe we'll just reduce the position in Boeing as well. So it's a big move in 3 weeks, 30% move in Boeing in 3 weeks. That's big. Okay, so Boeing, we did that. What else?
Lee puts.
What did I see? Lee puts. I was going to say I saw some Lee puts earlier today. It looked like they were here. It looked like there was a spread, basically someone getting out of March. See the open interest, 11,000. Someone's getting out of March and into April, so they're rolling into the April 25s. Again, well, today you had news that China was throwing money into XPEV. So XPEV is not TSLA, which is telling you something. China supporting their Chinese companies, their Chinese autos, and maybe it's a message to Tesla saying that we're I thought Tesla on the news. I thought Tesla was going to be a little bit weak, but the stock is traded. This V here is pretty strong. I mean, that move it made down here and then straight back up and holding is strong. But I saw that China made this investment in XPV, but these things are expensive, and they're on the wrong side of the mountain. So that someone is lining up again. I mean, they're just taking their bullets and they're lining up again in the this is Lee. Remember, they were in there. We saw them before the market went down to 20, and now they're coming back for more of the April 25s. Again, when you look at these stocks, let's see here. When you look at these stocks, it found a little bit of floor here, but we're on the other side of the mountain here. So I'd be very careful if this thing, this thing could easily come back down again and touch the 20 if they don't like these big, EV was to some extent in a bubble, and they've reduced that a little bit, but they all look sort of the same, right? They all look sort of the same. And that makes it tough. Although this looks interesting to me, to be honest. This doesn't look like a top to me. See that? It's a diamond, but it doesn't look like a top. If I had an imagination, I could see it going to like 1,200. To be honest, I could also make the case here. So I'm not in Tesla, and I'm not trying to tell you where it goes. But when it was here, I was saying, 500 looks like this. After it does this, what do I tell you? Respect the V. Right? Respect that V. So, doing this for a long time, I will respect that V. That V is telling me, hey man, I know you wanted 500. We're not going to give you 500. 530 was enough. And we're going to take it right back to 700. And then we're going to hold it for 4 days. See, 1, 2, 3. So I'm going to respect that V right now. And I'm not going to do anything. I can make the case for this thing making another move towards the highs, or, following this sort of move one, and then this is 875 to 530. So let's call it 340, and 715. That's 370 ish. That would get you about to right here. So, I think it's no man's land here, but that V, you could do whatever you want, but I respect the V. Like the ocean, I respect the ocean. I respect the V. So it's Tesla, the Lee puts, they're still coming after that. What else? Oils?
What else?
Oils trading a little bit low. Yep. Real quick. Exxon, this is just, it's going to happen, but, we're long this Oxy. And, this is shuffling around here. It's, do you stay? Do you go? You probably have made some decent money here. The Oxy, if you have one lot, the Oxy, you can, I'm always telling you this, you can take, you have Maze, 23s, you can sort of take, if you have one lot, you could say, okay, I'm not really getting much protection here off this 23. So I'm going to sell this 23 and I can buy this 30 and then not look at it. I'll take $4 out of the trade, and then that's it. I took my money off the trade, and now I'm just kind of watching it through the earnings. Who knows what happens with oil and everything else that's happening over the next 4 weeks. So that would just be something where if you had a one lot, you can do that. I don't think it's good in this one. I don't think it's good selling options, because this is a name that is highly leveraged as a company. And if oil does get to $80, then this stock is going to fly. Okay. Right. This and MPC and ET, all of these types of highly leveraged oil names will fly. So not a name that I would be terribly excited to sell calls.
Fair enough.
Okay.
All right.
Good. I think that's it, man.
Yeah, for sure.
10 minutes. We'll get it back tomorrow. All right. You took me. You got me today. Good.
All right. It was a great session. We had a lot of nice words here in the comments, and we appreciate you guys. Make sure you like the video, subscribe if you haven't, and we'll see you tomorrow.
Awesome. We'll see you guys tomorrow.
Thank you, Felix. Bye.